David Pakman from Venrock, a venture capitalist, is going to join me, and we're going to talk a little bit about what he sees in terms of the opportunities for investors in this particular space.
Thank you. Great to see you.
Yeah. Take a seat.
Thank you.
You've got a slideshow to
just
start
a couple
with,
slides. Hi, everyone. Nice to see you. Thanks for having me. I'm a VC. We invest in early stage technology companies. And a little bit of background on why we're interested in crypto collectibles. Sophie, if you could put the slides up. Great. So the real main reason why we care about the space is we're mostly focused on activities that consumers are already doing in another context, but have a new digital purpose around them. If we could, there we go. So what do we do already that we have a new digital purpose for? Is we collect. As a species, humans collect. There's been 7 different reasons that psychologists have categorized why we collect things. We collect for investment reasons, because we want to bring order to the world. We collect things because we want to complete the set. We collect things because it enlarges our social circle. A bunch of different reasons why we do it, but we do it as a species, and we've been doing it really since the species has been around. We collect art, we collect baseball cards, and then we go to giant conventions and trade them with each other. We collect Pokemon cards, which is probably the most popular card collectible in the world today, and we even project our love for why we collect these things. If we could go to the next slide for me, Sophia. When our girlfriends package them up nicely, we get excited by that. We collect shoes, which is both practical and impractical in this case. And guys, don't laugh, you do it too. We collect. But most of the things we collect, pretty much everything we collect, are items in the real world. They're analog items, and that's because of the reasons that Michael talked about, is because they're scarce. Now, not everything you collect has to have an extremely limited quantity, but it is the basis for some huge asset classes and business models. You're familiar with the urban streetwear craze of the last decade. Brands like Supreme and Off-White and Kith release or even limited edition shoes. They increase in value 8 to 10 times the minute after you've stood in line to buy one, because they're scarce. There's limited numbers of them. But in the digital world, we really haven't had scarce goods. Every digital item is perfectly copyable. Now, that's not entirely true. You're all very familiar. Next slide, please, Sophia. You're familiar with video games, which have been offering collectible or purchasable in-game virtual items for a decade. And those items actually have all sorts of value to them too. Some are traded in-game, and some people have found creative ways to move their accounts or their goods outside of the game itself. But what's the problem with this is that these little marketplaces are controlled by a single company, right? The publisher of the game, which as a collector can bother you, because suppose that company changes the rules on you or decides to create another 1,000 gold swords that they hadn't told you about before. It's hard to trust a single company to be acting in your long-term best collectible interest, because there's so much evidence that ecosystems change and companies change. So where we have now, next slide please, Sophia, is we have the first opportunity to change that. And by putting collectibles on the blockchain, as Michael explained, that Dapper Labs did in December of 2017, it was an experiment. They created the first ecosystem around a digital collectible that can be scarce. And what I think is so important about that is the crypto collectibles, which are enabled by the ERC 721 token standard and some that have followed it, they change the rules. They make it so that the rules can't change. These are immutable asset classes. They're decentralized in nature. No single company controls them once you buy them. If the company goes out of business, your collectible will be with you forever. You can buy, sell, trade them on decentralized marketplaces not controlled by the original creator. And they open up ecosystems like communities where developers can create new use cases for your collectibles. It's not just like shoes that you can wear. These are items that can be used in games. So last slide, please, Sophia. So we're super excited about this space, and we invested in Dapper Labs and led their last round, largely because we think that the concept is interesting, but a whole bunch of stuff is missing. You're missing scalable blockchains to allow for the millions of users who will likely flock to crypto collectibles. You're missing really easy to use user experiences for both onboarding, purchasing, owning, displaying, and trading, buying and selling these items, and you're missing a bunch of games and ecosystems. So we're excited about the promise of it. I think it's super interesting, but I think we're really at the beginning. Michael and I shared a word about that earlier. This is the start of what hopefully can be a multi-billion-dollar industry.
Great. Thanks for that, David. The history of collection in 5 minutes is fantastic. Can you elaborate a little bit on that last slide, right? So this is, we're at the beginning. You mentioned a bunch of things that need to happen. When, right? This is the classic question. When do you think we get to the point where this is truly something that can proceed on scale and be truly transformative for that reason?
Well, first, very least, we need a scalable blockchain. You know, Ethereum didn't scale when CryptoKitties was released. They had like 30,000 simultaneous users, and it broke, right? And it took 1 week clearing time. So that doesn't work, but everyone knows that, right? So there's a lot of people working to solve that. There's a lot of blockchains that are meant to accomplish scalability. Some of them I'm excited about, some of them I don't think will. I think there's some debate about whether sharded blockchains can actually produce scalable blockchains for collectibles, so I think we have to see some alternate solutions. So at the very basic, we need a platform for them to work. We need wallets and user experiences, and then we need compelling brands and IP and gaming. I think, if you took Pokemon and released it, if Nintendo offered 1 million Raichus and 2 million Pikachus and for sale, but there were never going to be any more released, I think it would be a $500 billion auction. I mean, literally, I think there would be $500 billion of demand for it. So I think there's demand. I just don't think we have the infrastructure to support it.
That's a really interesting segue to the next question I was going to ask, because I was thinking about the point you made about how these items now live outside the platform. It doesn't matter whether the platform collapses or goes away, you still own this thing. And the question I was going to ask is, how does a platform make money from that, right? Because traditionally what we've had is like, I have a closed walled garden in which I can trade these things. If I was to let that thing get outside the platform, how do I manage that value? And maybe it's this auction aspect that I'm actually sort of literally selling scarce items from the start, where I bank that, and then it requires the transportability to actually give it that value.
Yeah, totally. By the way, sorry, I think there's $500 million, not $500 billion of demand for Nintendo to release Pokemon. Yeah,
you never know.
Still, $500 million. But I think your question's a great one. So I think there's a couple different models that people are exploring. There's original IP, brand new IP coming to market where you buy the collectible and there's some, let's call it gaming light associated with it, right? Like CryptoKitties, you wouldn't argue, is an ecosystem of heavy gaming, first-person shooter, Fortnite. But there is light gaming. There's a light gaming aspect to it, the breeding portion of it, right? And sort of decoding the genome and trying to figure it out. So I think we're going to see a lot of that. But I also think there's a lot of room for existing IP to come into this space. Baseball card models have been around for a long time. The leagues make a little bit of money when Topps sells baseball cards, but they make no money when you trade them later. The 1910 Honus Wagner that was worth $3.5 million and sold a few months ago, Major League Baseball didn't get any piece of that, right? But in these models, I think the IP owners can participate a small percentage in the transactions in perpetuity, which I think excites IP owners to say, wait a second, we can make collectibles that increase in value and we participate economically long term. So I think you'll see them appear too.
Right, yeah, it's that smart contract connection that's really important to that. So a lot of talk about gaming is where this is going to go, but where else do you see this evolving from both a business and kind of a societal impact perspective?
Yeah, I think, well, one, I'm really excited to listen to the conference today because I think you and other speakers are exploring how much bigger are NFTs than collectibles, and I think it's quite big. The reason I'm looking at this first nexus is because I think that, as I mentioned earlier, I think there's an analog to existing human behavior that translates really nicely to the blockchain. I think many of us that have been following the movement towards blockchains and decentralization in crypto are excited about the societal ramifications, what governance can mean by it, the move away from the dominant platforms. But I don't think the average consumer thinks about it that way, right? But if I can buy an experience in a Major League Baseball game or a character or a player and own it, a limited number of them, and trade them and maybe even use them in EA Sports' games, I think that's pretty compelling. And you don't even need to know that it's built on a blockchain on the ERC 721 standard to get excited.
Now, you and I both talked about scarcity as this important aspect to this. And what I find really interesting is how much that stands in almost contrast to the prevailing nature of the digital world, which is the age of abundance, right? We're already talking about proteins being computer generated, that we may get to the point where life itself just no longer has scarcity in the physical world. But somehow it's incredibly important for us to value things to actually create that scarcity. Can you break that down a little bit and sort of delve into why this is so important from this digital perspective?
Well, I'll take it one step past collectibles, which you mentioned already, which is art in general, expression, right? So if ideas, I'm talking about a song or a work of art or a comic, can have some scarcity to it, that enables artists to profit in ways digitally that they've nearly not been able to. As you pointed out, I mean, the shift from physical CDs to online downloads and then streams really decimated the music industry. It's about half the size of what it once was, largely because they don't control distribution like they once did. But built atop a blockchain, we can create a world of digital scarcity, and maybe we can start to actually price limited edition art in a way that enables creators to have more fruitful economic experiences around their creation. I think that's a different opportunity for all of us that has been lost. We've heard about for a decade sort of how artists have struggled in the move away from scarcity.
I like that you said all of us, because in our book, The Truth Machine, that came out a year ago, we had a chapter in there called We Are All Creators, right? And the idea is, again, we are not Facebook's consumer, we are Facebook's product, or rather Facebook's quarry, but either way, the point is that we are now creating the content that essentially the world runs upon, right? Obviously, Beyonce makes $1 million from an Instagram post and I make nothing, but the point of the matter is all of us are participating in this process, this creative process. And we talk about the end of work as this challenge to humanity. How are we going to have self-actualization, let alone make money? We need a system that is somehow going to build value, whether that's money or just some other way of measuring the value of all of that creative content, all that creative contribution that human beings as a mass are going to constantly be adding to this big pool of data, right?
Certainly, like decentralized networks in general, so not specific to NFTs, maybe hold some promise here, right? Like as you pointed out, so many of us built Facebook by posting our baby pictures and our pictures from last night's party, and none of us got any stock for that, and certainly didn't get a cut of their advertising earnings, and the company's worth a couple $100 billion. I was pretty sure at their IPO that they were going to try to offer like a friends and family for our users, which they didn't end up doing. The concept of tokenization, right, allows participants in a network to participate in the economic value that they create. And so since networks are one of the strongest business models that we know, they're really sustainable and hard to penetrate, it'd be great if the network participants got to take a piece of the value they create. And I think broadly, decentralized blockchains will allow that.
And on that, we've got these platforms that essentially we still need. There's the network effect that brings us to Facebook and to Amazon and to others, because we have to be where everybody else is. Will these systems allow us to actually challenge those models, or do we still have to live with the sort of the network effect, Metcalfe effect kind of impact of these large platforms? Or do NFTs and blockchain allow us to create competitors to them?
Well, so I don't really think that someone's going to launch like decentralized Facebook and then everyone leaves Facebook, right? Like that's not going to happen. But I think those of us working in this space can build alternate, compelling experiences that are very different ecosystems, right? The collectible ecosystem where developers are attracted to building apps or experiences around a collectible that people own and it can get better and improve over time. The benefit inures to all of us in the community, not to a single company. That is an alternate way to build value than the Metcalfe network, social networks that have created such giant companies.
Right, so it's this notion that it's not about trying to create a competitor per se to one of these entities.
It's going to be a different experience. Yeah.
And what any ideas what it looks like?
Well, I made a big bet around collectibles. Like I think that's pretty interesting. I also think it can happen early in this. We're talking about a 10 or 20 year technological shift here, right? So what comes first? The danger here is that we're all too early, not that we're wrong. I don't think we're wrong. I think we're all going to be either too early or our timing can be right. So the question in my mind is not what, but when. And I think when, again, I look for what do people do in the real world that we can enable in the digital world in ways that is the same or better and is super easy, right? Like if it's as hard as buying crypto, this is not going to work.
No, absolutely not. Listen, I'm going to leave it at that. David, thank you so much for your time. A round of applause to David Pakman, everybody.
Thank you.